Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show with Tom Hugart as soon as he calls in. But before Tom does, I have been asked to talk about the wheat trade that we were looking at on Wednesday when wheat was up around that 592 level. We were saying it was probably a good short at 591. The reason why, folks, is you'll notice the double ABCD patterns that we have here. That's all that was. If you did the time free sequences, a time up equals time down, you would have seen that that it worked relatively well, and of course it had well over 15 cents in it, which when you're only risking 4 cents and make 15, that's what you're looking at. There's another one that is very interesting this morning too, and I'll put this up so you can see another double ABCD pattern, and that is in the Big Daddy Rabbit. The NASDAQ, we got up to I think 92.88 last night. That makes a double ABCD pattern. We could certainly go higher, no problem about that, but that is a completed pattern. Now, someone's asked a question overnight whether that was a 3-drive to a top pattern, and the answer to that is no, because there's not any symmetry between top 1, which was on January 17th, top 2 on January 22nd, and the next one would be on Tuesday, Monday, be the 27th. Now, Chinese New Year starts today, folks. I'm sure you're all aware of what's going on over there. They've now closed all of the McDonald's, I guess. And we have, I think we have a total of 11 cities that are under lockdown. And, that's really what, that's really what we're looking at here. I mean, it's pretty serious, and yet the World Health Organization says there's nothing to worry about. Yes, today is the year of the rat, Marshall. You're absolutely correct. I was born in the year of the snake, and hold on, we'll move on to another topic here a little bit. I did want to share one other chart with you, and that is the chart for the Dow Jones last night. You'll notice that we last night we made a 1.618 expansion in that chart over the nightly range, and the DAX and all these markets all rallied very strongly, and they stopped right at their expected stopping points. I'll bring up the German DAX here pretty soon. Here we'll get this up here. One second. Let me get the Dow Jones up because that's a very interesting one. This was one that Tom was using, and I want to bring it up here. You'll be able to see that's the 135 pattern that we were looking at there, and so that's it. Intel, very strong earnings, of course, and it's boosted the Dow, and I believe Intel is in the Dow, isn't it? I don't even follow the Dow stocks anymore. My gosh, you know that there's no stocks left in the Dow Jones, folks, from the original. They're all gone. General Electric, I believe, was the last one, and it was replaced by, I think, Walgreens, but all of them are gone. During the 1920s and 30s, we lost half of them to either takeovers or bankruptcies, and then through the years they replaced them as they see. The Dow Jones family is, they're responsible for the Dow Jones stuff. It's a big organization, and I remember when we were on the floor of the Merck, Leo Malamed really wanted the Dow Jones, but they wouldn't give it to him. They said it was too speculative. They didn't want to get involved with this. And the reason why I know all this is that Byron Tucker was his right-hand man. And so Leo went to the S&P 500, and they gladly said, yes, we'll do it. Then after it became very successful, it started in April April 16th, 1982, and then about a year or so later, they finally caught on, and then the NASDAQ came in, and then later on, of course, the Dow Jones futures, and then later on the Russell. But the number one is the E-mini S&P, number two is the Russell, number three is the NASDAQ, and number four is the Dow Jones. That's how it lines up with open interest and volume, and volatility. Of course, nothing compares with what the NASDAQ does. That's the biggest thing in the whole thing that we're looking at here this morning. Now, with the things that are going on, I just wanted to show you what's going on here in Hong Kong as far as the stock. Hong Kong is going to be hit relatively hard, I believe, over this lunar holiday, and it's 6 days, folks. China shuts down. It's a combination of Christmas and New Year's, and it's really a big thing. And we will watch it, but they're expecting 52% of all the travelers coming to China go to Hong Kong. And now a lot of these folks are not even able to travel. I was fortunate enough to speak in Wuhan, China, about a half a dozen times over the past 20-some years. It's a beautiful city, a large university there. Their largest virology unit is in Wuhan, and that's where this virus has started. I don't know if you know the origination of it comes from the live wet market where they sell snakes and bats. Believe it or not, people eat that stuff. Snakes are not, I can understand, but bats, my gosh, that just doesn't seem right. But if you've ever been to Thailand or China and go to the major parks, you'll be able to see them, they eat insects and snake blood and all that other stuff. I don't know what Batman would do, something like that. Okay, let's move on. Oh, I better stop that. Okay, let's go on. I meant to tell you that it is gross, and I don't even like to talk about it, but it was talked about on Bloomberg today and also on CNBC. But I was in Guangzhou in 2002 when it started, when SARS started, and I remember it was the same time of the year, folks, believe it or not. The reason why I remember that, I was looking out from the window of the hotel, and I saw these hundreds and probably thousands of people surrounded in this building. And so I called down to the desk, and I said, "What is it?" She says, "Well, it's the Chinese New Year's. Everybody's traveling." And it was the train station. They were standing, it was circular line, like a spiral. There were so many people, blocks long, just waiting to get trains to get out of Guangzhou. And Guangzhou is a huge city. It's probably 15 to 20 million people. Beijing's about 33 million, and Guangzhou is one of the second largest. And that's how big a deal it was. So you can imagine all these people trying to move, and with all this infection going on, it's going to be an absolute disaster over there if something really bad happens. But, whether it does or not, I don't know. I certainly hope not. But they said this is not as bad as SARS because the people that have died, most of them are unfortunately my age or older. So I'm not going to China for the holidays, folks. I'm going to stay right here in good old Tucson, Arizona, in the Pueblo. So you don't have to worry about that. That's for sure. It doesn't look like we're going to have Tom today. He gets real busy, folks, because he does a lot of active trading. And I'm just going to walk through when we come back from the break. Walk through what he was going to talk to us about because I follow him each day. I talk to him daily, and I learn something from him all the time. And it's very interesting. You'll see how his thought process. That's the real interesting thing that I wanted to go through with this. That's the whole thing. 877-927-6648. Coffee coming up, Ruby.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we have a request to take a look at the coffee market from Ruby, and as you can see here, went right down to exactly where we thought it was going to go, folks, 111. The hello was, I believe, 110.50. So if you're in that, put your stop just a little bit below that low so you're going to be able to trade coffee for less than $200. Your risk would be pretty much quantified there because it's already moved, 3 cents. So I would definitely, put your stop at near as break even as you possibly could. That's something, and believe me, folks, with that big, strong down move that we've had here, you have to be really careful to keep your stops really close. You can see what's happened with crude oil. If you remember the bearish bias that crude oil has been telling us ever since it hit $65 a barrel. We're now $11 under that, folks. We've dropped 20-some% in a matter of just a few weeks. And as soon as we start going through those numbers, and you'll notice the coffee chart, there's a perfect example. You'll see how the 382, we marked that. That was the first place. And then the second place is right here at the 61% retracement. The reason why we didn't look at the 50% retracement is because in order to use a 50% retracement, the only reason we do that is if we have an ABCD pattern that ends at the 50% retracement. And then you have something that gives you a little bit extra. You just like to have 1 or 2 extra numbers or patterns to line up. So that's it. We're going to be able to see what this happens. The key to that oil market, folks, is when it broke $57 a barrel. That was very, very, I'll put the crude oil chart in just a second, but first, I might as well do it right now. Otherwise, we're probably going to run into some trouble. I want to get this up here to take a look at it. And I sent several videos on this thing about the 57, but you can see here the 78% level at that 57. Once we went through that, now, folks, you realize that we're down below the lows that we made in November, December. Look at that little 3-day rally that we had. You see what a sick 3-day rally it was? I mean, that was really telegraphing that, that's what's going to happen. Someday that'll happen in our stock market, but not necessarily in our lifetime. So we'll take it. Okay, I'll just have Tom call in right now if we can, and we'll see. We'll get him up here, and we'll hopefully get the show started with him, which would be nice, and we'll be able to get it done. We've got we got enough time to get through it, so we'll be okay. We'll be able to run through what he wants to do. I'm waiting for him to call in right now, and then I will post the chart that he has given us, and we will move on to there. Let's move back to this level right here, and I'll get this chart up so we can take a quick look at it, and then we'll get Tom up, and then we'll move from that level. Evidently, he's not going to make it, I guess, and I understand that. He's going out of his way to help us, and we'll see. But anyway, this is his hourly chart that we were looking at on Monday, and he was looking for a sell at 292.51, and he was telling there about how concerned he was with the German DAX, but he knew what his risk was at this particular point. So that's what he was doing. He took a smaller size position than he usually does, but the main reason why he went into this position was because of the pattern that he was seeing in, hold on, let's get this up here so you folks could see it also, was the pattern that he was seeing in the stock of none other than Boeing. And that's what did it. So let's see what we got in. So he's calling in right now, and then we will move on to the third one. Hopefully we'll be able to get Thomas up here, and we'll be able to look at it. All righty. And this was a third chart of the group that was telling him to take a look at the short side of the Dow on Monday, and of course it had a big move to the downside. This is the same pattern that we have going on. I think we might have Tom on the air now. Is that correct, Thomas?
Yes. Hi.
Hi, Tom.
Hi.
I was hoping you were getting, I know you get really tied up, but I went through the first three charts about why you wanted to look at the Dow, and then I showed the pattern that you were looking at in Boeing and the fact that it was 7% of the Dow, and then I showed your Dow daily chart showing the 2100 moves. And so if we could go to the fourth chart, and that's where we're talking about resistance, could we start there?
Yes, of course. We start where you want, my friend.
Okay, why don't we go ahead and talk about that where you had that tough resistance up in that area. And the main thing I wanted, of course, to talk to you about is how you handled it emotionally, because that was what was really interesting to me. Go ahead, my friend.
Okay, well, thank you for having me on the air, by the way, and I also think I need to say Happy New Year. I don't think I've been on the air for a while. I did a talk for a broker in December, and I was asked the question, well, what do you think about technical analysis, and how important is it to you when you're trading? And I think I was perhaps a little grumpy when I gave that speech because it was late in the day. I'm an old man and I should be in bed by then. But I kind of alluded to the fact that I didn't rate technical analysis very high because I don't think it is good. It is not the majority component of a good trader. Of course, you need to know your craft. You need to know your Fibonacci, your Bollinger Bands, or your Kelton Challenge, or whatever you do. But actually, I think this trade that you're discussing here is probably one of the simplest setups, because we all know support and resistance. And all I did here was to sell into resistance. I still had the belief that the market was range bound as opposed to being trending. And it felt to me that every single time it butted its head up around the 29,400, I needed to be a seller. But one of the things that I I took away from my 10 years as a prop trader and an analyst up in London was that the best traders, they were not afraid to buy something that had already rallied, and they were certainly not afraid to sell short something that had already fallen. And in this particular case here, the Dow at that point where I go in and I sell at 29,302, I think it is, well, the Dow had already fallen 100 points. And there's not that many people that would actually sell into something that had already fallen quite a while. And so when I looked at the behavioral patterns of about 25,000 people over 100 million trades in the 10 years that I worked on a trading desk, it was one of the very, very rare qualities that the best traders had, that they had the ability to actually sell short something even though it had already fallen. And when the market then began to roll over, which initially was quite slow, I added to my position. And that was another trait that I learned from my 10 years, was that actually a lot of people, they're very good at adding to their losing trades. But it's perhaps 1 in 10,000 that is capable of adding to their winning trades. And it's a psychological flaw that we prefer to add to a losing position because we feel that somehow there's value in the market, but there's not value in the market. We're trading other people's emotions, and psychologically then holding it overnight. And then if you go to chart number 6, I tried to, as elegantly as it was possible for me at 5 o'clock in the morning, to describe what I felt yesterday afternoon when the Dow double bottomed at 29,000. It was a very unusual experience for me, and if time permits, I'd like to explain it to you after the break.
Yes, we will. We'll do that for sure.
Larry Pesavento has just announced a special 90-minute live webinar taking place this month for subscribers to his Fibonacci 24/7 trading service. On January 29th from 4 till 5:30 p.m., Larry will be covering how to read supply and demand and how, in combination with his trademark ABCD patterns, you can control risk and maximize profit in today's algo-dominated markets. In this live 90-minute webinar, Larry will cover a hidden in plain sight trend change pattern that gives you early entry into the trend, how to find and update the key harmonic numbers to trade against in futures, forex, and stocks, how to translate 3 go-to patterns into supply and demand, and how to use them for entries, the continued importance of the opening price in 2020, and how to use the time of day when taking a position and for entry into longer trends. Sign up now by clicking on the newsletter tab on the front page of TFNN.com and select Fibonacci 24/7. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Tom Hugard. Tom, please explain. This is, I talk to you a lot, but when you wrote this description of what you were thinking, it reminded me of reading Jesse Livermore's book, Reminiscences of a Stock Operator. Do you want to go through your thought process that you talked about, please?
Okay, so I came into the trading session yesterday morning being short $200 a point in the Dow, which means that every Dow point is worth $200 of exposure to me. And the market is in more or less in a free fall. We are seeing the DAX collaborating with the weakness in America. We saw a very weak Asian session. So I felt that I was onto a good thing. But when you're onto a good thing, it's a new set of circumstances that is now on the forefront. It's one of the things that I remind myself of every single day that I trade is that the demons are always lurking. And the demons are the ones that will want to make you move your stop loss a little bit further away so you don't get stopped out. But it is also the very same demons that I'm fighting when I'm in a profitable position. And every cell in my body wants to take my profit. And it is what Jesse Livermore, just to bring him up, you just mentioned this, you don't make your money because you invented a fabulous new tool. You make money in trading by sitting on your hands. And sitting on your hands when you are in a profitable position is probably the hardest things that I ever had to do professionally or otherwise. And I know technical analysis just as well as anybody else does. Everyone's a chart expert. I don't believe that my chart skills are any better than any other person. So I don't see things that normal people don't see, and I know that round numbers can be psychologically important to the market, hence 29,000 in the Dow, and I agonized over that 100-point rally we saw the first time it hit 29,000 yesterday afternoon, but when it came down there again, I had a real strong feeling that I should take my profits, and I refuse to do it because it's just not my philosophy to trading. I will never get out at the maximum profitable potential. But in order to somehow solve this, what psychologists call cognitive dissonance, I decided that at least I would take half my profits, purely because it's been quite a while since I had a pretty good runner, and at this point, with two positions, each of them making 300 points in the Dow, I felt that I could be somehow justified in taking a little bit off. So I solved it by closing bit of the position, but I didn't feel good about it, not at all. And when the Dow then rallied another 100 points up, I shorted the Dow again, and well, the rest is history. I got stopped out on the second half of the position with a total of break even from the first and the second position. So now I'm flat in the Dow. But I went to bed last night thinking, this is a very unusual situation because I'm not disappointed because I know that in order for me to be profitable for the long run, I need to constantly think what the 90% will not be doing. And the 90% are very quick to take profits. And I know through experience, through watching and observing over a decade or more, that the only way that I truly stay on the edge in the trading game is to constantly questioning it is what my mind signals me for me to do, because I know that my mind left unchecked will just drift, and it will enable me to begin to do things that is really not financially in my own best interest. So it was very educating, and I made a little bit of money, but I was up $30,000 yesterday at its peak, and I only took away $10,000. Do I feel sad about leaving so much money on the table? next time the Dow is going to have one of those trend days and it's going to fall another 300 points. And it gives me more pain to close a position early and then see the market continue in my favor than it does to move my stop loss to break even and then be stopped out for nothing. And I think that's a very important distinction to make.
Oh, that's worth the price. Repeat that it's more painful. Repeat that last sentence, if you would, Tom, because that's important.
Of course. What you really have to ask yourself is, if you are faced with two different scenarios, which one gives you most pain? Stopping your position out at break even because you followed your rules, or guessing where you are having most maximum profit potential, but then only to see the market giving you even more profit? And I don't know how many $100,000 positions I've had that turned out into very little, but at least I was true to the form that I know that the big money is made by sitting. And it gives me a tremendous amount of pain if I exit a position early just because I think the market couldn't go possibly any further, because it usually does.
Mm-hmm. Well, listen, my friend, I want to thank you for being on the show, and we'll have you on again within the next week or two. How's that? We're certainly going to see some volatility, I think. Have you talking much about the virus over there in the UK?
Yes. We of course we're talking about it. There's cases now in Scotland. They are under observation. I think the whole world is observing this. What surprises me is that the market doesn't seem to be indifferent, and I don't know what to read into that. So right now I'm actually on the sideline. I'm a little bit undecided what to do today.
Hey, well, then sit on the sidelines. I know you won't do that, but hey, listen, thanks a lot, my friend, and we'll talk to you soon, okay?
Thank you for being here. Thank you. Appreciate that. Thank
you. Okay, you bet. Tom Hugard, folks, Trader Tom. If you want to go to telegram.net, you can see him there. I was fortunate enough to start working with him back in 2004 when he was just a little whippersnapper at the age of 34, and he just turned 50 last year. I think we might be able to get Tim on the line now. He's been so patient. Tim, are you there?
I'm here, Larry. How are you today?
Well, I need a new wristwatch, Bubba. My time's so screwed up today. Hey, Happy New Year. Happy Chinese New Year to you, my friend.
Indeed. We got the Lunar New Year coming up here, and so it's time for celebration. How's that?
Listen, the thing that's going on in China with this virus, it happened to be at the same time that Guangzhou in 2002 was at the Lunar New Year, too, that it started. Is there anything that would cause anything like that, 18 years later to see something like that, a cycle of some kind?
Well, the cycle that applies to 18-year intervals is a cycle of the lunar node, which takes about 18 years to go through the zodiac. The lunar node is not actually a planet. It is a mathematical relationship between the position of the sun and the position of the moon that we track in astrological work because it's very important about making connections. And so that nodal cycle applies to real estate and fluctuations in real estate markets, also in other markets as well. And so it is one of those basic dynamics that the entire Earth adheres to. And certainly I'd be looking for that connection first and foremost, just based on the timing. As I recall, I think it was in 2002 that you and I were both speaking at one of Grace Morris's conferences, and there were a number of people that couldn't make it because of the SARS outbreak. At that particular time, it was restricting travel pretty severely.
I remember it was in Chicago, wasn't it?
I believe so, yeah.
Yes, I remember very much. Listen, we got a break coming up here, but I posted your astro cycle trend projections that you talked about, because that's been pretty much spot on, and we're right over the B point right now, aren't we?
We are indeed. We are right at
We'll be right back with Tim Boss, Financial Cycles Weekly out of Florida, 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking to Tim Boss, Financial Cycles Weekly out of Sarasota, Florida. Tim, this Astro Cycle projection that you have, you're looking at a low to come down sometime in the middle of February?
Right. We're looking for a decline into February the 14th on Valentine's Day with that point D on that chart. So that we've got about 3 weeks of potential bearish action in the S&P according to these cycle projections. I should point out here that with this cycle chart, we do a pretty good job of identifying the prospective turning points and the relative positions there, but the amplitude of the moves is not always accurate. So it could be a much smaller move down than the chart might suggest. It looks like the bottom's about to fall out here. We are expecting, however, a decline into that particular time frame.
So wait a minute. You're telling me that you can't tell me the exact highs and lows at the exact time?
Well, we can do a pretty good job of that sometimes, Larry, but when we're projecting months ahead, it gets a little bit sketchy. How's that?
When we get it right, we're lucky, that's for sure.
That's right.
We're having a question from one of our listeners. That is, what do you, when you talk about Apollon and Daedalus and Zeus, what are those? Is that the Uranian astrology?
Yeah, these are the factors in Uranian astrology. We refer to them as the trans-Neptunian factors. These were considered hypothetical for until about 20 years ago, when we had the discovery of the Kuiper belt, which is a big band of tiny little objects objects out in space, out beyond Pluto, and these really coincide with some of those Kuiper Belt objects. And so what we're looking at here is based on the cycles of these very, very distant objects that line up with the Earth and with the other planets. And so the main factors we're considering here are the direct and retrograde stations of these Kuiper Belt objects. Those are the times when they seem to be moving forwards and backwards based on our earthbound perspective, many, many miles away. And the implications on the markets are fairly consistent. Some of them have stronger impacts than others, and we're continuing to do research in that area. So we always factor those in when we look at our cycle projections, because sometimes we'll see something very obvious, like, okay, we've got something happening with Mars or Jupiter, which are pretty strong impacts on the markets. Sometimes it's a little bit more subtle, and what we have determined that coincide with these cycles is oftentimes the directions of these Kuiper Belt objects that we refer to as the trans-Neptunians, or the so-called planets from Uranian astrology.
Our good friend Bill Meridian was the first one to talk to me about this many, many years ago, and it was so far over my pay grade that I just sat there and was mesmerized. I was sitting next to he and Alfie Lavoie over in Singapore, and they were talking about it, and I said, "What planet am I on?" I kept looking for Obi-Wan Kenobi because it was, but they felt very strongly that it had some very good applications. And of course, Bill is saying that, as of the 10th of January, he had switched his positions. He got out of all of his long positions and was waiting for, like about a 1 month to 3 or 4 week correction, and that's pretty much what we're looking at right here as we look here. One of the questions we're having from another listener this morning is that we have this Lunar New Year starting today. It's actually the 25th, but it's already the 25th over in China. So it is a situation where it's a new moon, correct?
Correct.
Yeah. Now, do you find that new moons are more powerful than full moons? That was the
they
question.
have different kinds of impacts. Typically, new moons mark new beginnings, and the establishment of new trends will often occur with new moons. We do a lot of work here at a specific type of a new moon, which is known as a solar eclipse. Whenever we have a solar eclipse, that's at a new moon, although not every new moon is a solar eclipse. So there's a tremendous amount of power in that. With the full moon, things get a little bit more tense in general, and a little more confusion in the markets. So they both have their unique properties. But what happened at this whole dynamic here is that with the 10th was actually a full moon, which was a lunar eclipse on the 10th of January, which coincided with Uranus making a direct station, which is one of the reasons Bill and a lot of other astrologers identified that as a key point to shift market positions.
Well, we've got one other question here. I don't know if this is in your bailiwick or not, but is the year of the rat any significance?
Well, the designation with the animals of the zodiac really is about Jupiter cycle in the Chinese calendar. I happen to be born in the year of the rat myself, so I'm expecting it to be a very fortuitous year for me. I don't know about you. Okay, how's that?
Hey, listen, every day above ground is a good day. That's the way we look at it.
Yeah, you got it.
As you get into that eighth furlong, when you get into that eighth furlong of a mile and a half race, you got to be really careful. That's for sure. Hey, listen, tell the folks how they can reach you, Tim. What would be the best way to oh, by the way, I wanted to congratulate you for being in the top 5 of the Timer Digest again this year. So I think that's fabulous. I'm really happy because 5 of those people I know very well. 5 of the top 10. So that was pretty good.
You got
so
your
congratulations.
guest list for your show right there.
Yeah, just about. That's what I use, as a matter of fact.
Okay, yeah, all right then. So the best way to connect is join our free webinar that we've got coming up here. It'll be on Tuesday, and that is bit.ly/AstroNow. That's capital A, capital S, capital T, capital R, capital O, and then lowercase NOW. And that will get you connected with the registration page for our webinar, which is absolutely free. We're going to be talking about the current trends in the markets and what's working now in Astro Trading. So it's a great way to make a connection, get introduced, all are welcome.
Well, they can also reach you at financialcyclesweekly.com too. Is that correct?
That's correct. Yeah, that's our flagship website. We've got lots of information there, and information about our subscription services and so forth.
Okay, we're going to have you on soon. And anytime that you see something that really lights the candle there at the household, please give me a call, and we'll have you on just as soon as we possibly can.
Okay, Larry, I'll take you up on that. Sounds good.
You bet. Thank you for calling in,
Have a great
Tim, and
weekend.
thank you for being so patient. Okay, Tim Boss, Financial Cycles Weekly of Sarasota, Florida, a really nice fellow, and he's ranked way up there, along with our good friend Steve Rhodes and Kerry Szymanski, and my gosh, there's so many of them in there. Arch Crawford, it's really a pleasure to have some of these really smart dudes on here. So let's keep a close eye on these markets, folks, because we are over some interesting times. I'm very skeptical about all the news that comes out and just about everything anymore, because it makes you wonder, how these people think up these things. But we'll have to just to wait and see, what is going on. All right, we got a break coming up in a minute. When we get back, we want to talk about the sugar market, folks, because the sugar market is at a very, very critical level, very, very important level, and we need to watch that very, very carefully. Very, very important. So 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I've posted a chart of the long-term weekly chart on sugar, folks. The reason why it's important here is you can see the double ABCD patterns, much like we've seen in some of these other things that we've been watching. So it's very important to keep a close eye on that. It's at least that's what it looks like from the chart. So we do have a double ABCD pattern at that point. I do want to cover, oh dear, I hope I have the cattle chart. Don't see it. Shut the front door and raise the rent. Oh, doggone it, I don't have the cattle chart, but by golly, we were looking for a top to come in on cattle, but they came in a little lower than what we originally wanted. Let's get this cattle chart up so we'll be able to take a quick look at it. We wanted it to get up to the 130 level. We only got to 128.70, and then the cattle have broken down. We've got all the way down to the 123 level. So a major top is up here in cattle, almost at a double top. You can see way back in May. So that area around 128 must be a very strong supply up in that area. So we want to watch these patterns unfold as we see them coming through. So that's what we're sort of watching, what we're seeing right now. The oil and copper, beans, when you see this stuff that's going on with China, folks, that stops exports. It stops demand. People, basically are on a survival mode over there. When you stop and think, if we shut down Los Angeles, San Francisco, New York, that would probably be a good thing. Terre Haute, Indiana, and Chicago, and a whole bunch of other big cities. What would happen to our economy? It would be really unbelievable. That's it's pretty much what you have to be thinking about. We don't know what's going to happen. Remember, the hog thing for us didn't mean anything. For them, it meant a great deal. They're having some disease problems over there, folks, with the hog market, and now possibly with this disease. And if it gets really bad, that's going to affect a lot of stuff possibly. So keep that on your radar. But watch the charts. They're going to tell you whether it's going to work or not. That's all these charts do, is they try to give you a little bit of an edge of where you want to buy or sell. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.